Guys, what a swing in the market. The Nasdaq was up 2.5%. At one point I saw it down 1.25%. That is almost a swing of 4%. That is not normal. We haven't seen this kind of intraday swing since April. Granted, in April, it was the bottom of the market. We got a lot to unpack here, so let's go ahead and do it. All right, so I'm traveling right now, but I'm seeing what's going on, and we're making a video today talking about a few things. One, Nvidia reported yesterday. We did a video on it yesterday, but now we're talking about the market. The Nasdaq was up 2.5% at one point today. As of the time I make this video, it is down 0.3%. That is a 2.8% swing. So why is that important? Well, it's a reminder that the efficient market theory does not work. There's no way that the value of the market genuinely changed 2.8% today. That is impossible. Now, why is it falling? Well, it surged to start. So the Nvidia results yesterday, they beat on earnings, they beat on revenue by a few percentage points on both. But there's also some analysts who think that what they're doing is a little shady, because what Nvidia is doing is they are investing in other companies, but those investments are based on the other company buying more GPUs and things like that from them. So they're like, wait a second, so you're investing 50 billion, but you're making that company buy $50 billion worth of stuff from you. I don't know if it's just, listen, I don't know what to take, because I understand both sides as much as I hate to say that. I understand the fact that some people would say, that seems like they're just trying to create their own demand, or they're trying to secure a long-term partnership with people that matter in the long run. You guys know, if you watched our video yesterday, I don't think Nvidia is worth what it's selling for today. Every investment is the present value of all future cash flows. And I think that Nvidia is being priced for perfection, and that does not last very long. All it's gonna take is a bear market, and all of a sudden, what happens? In a bear market, the leaders of the market will then lead the fall. You're seeing that now with Nvidia, Palantir, all these other hype companies that are up. Look at Meta. Meta was almost $800 a share just 2-3 months ago, and now it's below $600 per share. This is what I mean when I tell people, use Mr. Market as your friend. We're here to teach a process where price versus value. I'm gonna repeat this till I'm blue in the face, because guess what? I repeat it to myself until I'm blue in the face at all times. Some other news that came out today was unemployment, highest in 4 years, 4.4%. As we talked about in yesterday's Everything Money Plus video, what we discussed was that just a month ago, everyone, the CME group, was expecting a 94 or 95% chance that a rate cut would happen in December on the December 10th meeting. That is now down to 33% chance. These things happen, guys, because there's a lot of people in the Fed who think that lowering rates will spark inflation again and go against the Fed's goal of 2% core inflation. That's really important for them. They think it looks bad if they don't do that. These are some of the important things you have to remember, that these things change very quickly. Valuation doesn't matter until suddenly it does. And when it matters with a vengeance. Everything is rosy, hunky-dory until it's not. I'm not telling you guys to avoid the market. I still believe in dollar cost averaging. I do it every single month. I buy low cost ETFs, but when it comes to buying individual companies, I use a principle-driven investing approach. I understand that when I buy a stock, I'm buying a piece of a business, and I make sure I'm buying a business at a price that makes sense, where I can get an above average return. There's no reason to buy a business where you're gonna get the market average return. At that point, you might as well just buy a low cost ETF. Now, in some other news, Walmart reported they beat and they crushed it. They actually also increased their guidance, while 2 other companies like Home Depot and Target have decreased their guidance as of late. Well, to me, that's an indication of the consumer. This is purely my opinion. I look at it and say Walmart is the place you go to when you want to save money. Target and Home Depot are more about, not luxury necessarily, but you go there when things are good and you're feeling, Target's the higher end Walmart, right? Home Depot, you go there to do things to your home. But if you're struggling as a consumer, what are you gonna do? Are you gonna sit there and go to Walmart or Target and Home Depot? To me, this is a sign of a weaker consumer. We're seeing mortgage defaults and foreclosures up 20% year over year. We're seeing credit card defaults up year over year. I don't think this means that we should be sounding the alarm about a great financial crisis. But a recession, yeah, maybe so. But we've been looking at things and they've been kicking the can down the road for a long time with all this government spending to spur things along. Remember, recessions and bear markets are your friend to buy great businesses at great prices. Yes, Target and Home Depot aren't doing as well. Use that when the stock falls to your advantage to buy them, because guess what? When things do turn around, it'll turn around with a vengeance, and that's important to remember, because true money is made during recessions and bear markets, not during bull markets. You start in recessions and bear markets by buying great companies at great prices. If you're able to do that, you will make a ton of money when things bounce back. But don't jump in and out of stocks, individual stocks. Pick great companies that you plan to own for a very, very long time. I know it's hard to do that. The average hold time of stocks has plummeted. I get that. I just look at it saying, listen, the best way to make a lot of money in the long run is buy great companies at great prices and hang on. Just let them ride. That's the best way to do it. Sell them only, in my opinion, when their value is several times higher than it should be, or you have a much better investment and the stock is at a much higher value than want it to be, and you find an opportunity elsewhere. That's very important. Letting it ride and compound is very important. This is what it takes to be very successful in the long run. Everyone thinks there's some major stock tip that'll happen, but here's what's important to remember about stock tips. If you don't know why you're buying the stock, you're not going to know when to sell or why to sell, and you will sell when the market goes down, and that's not the right time to sell good, fundamentally strong businesses. So that's why we're here to teach a process. We're here to help people get better at picking companies for the right reasons. That way, when they become cheaper, you understand why they're cheaper versus should they be cheaper. Price versus value. We want to buy when price is below value. It feels in this market like price is above value in a lot of situations. That's why Michael Burry shut down his fund. He was sitting there saying, there's a major disconnect between my idea of value and the market's idea of value. That's temporary. We're going to look back at that moment and probably say, oh, that was probably an indication of where we were in terms of the market. Remember, the market's up about 50%. Well, as of a couple days ago, 50% from April 8th of this year. Just 7 months ago, up 50%. Is that normal? Come on, you can't think that's normal. There's no way the market fundamentally is that much better, 50+% better in a matter of 6 or 7 months. That's not realistic. So guys, I want you to do one of two things for me. If you like this channel, if you like what I'm doing, this is our secondary channel. And our goal on this channel is to make 3, 4, 5 videos a week. We go over what's going on in the market. When there's a lot of volatility like there is now, we'll be the voice of reason and calm. So subscribe to the channel if you want that reason and calm, if you want to sleep better at night and understand better why things are happening or why you shouldn't care why things are happening. We're the channel for you. Second, if you've watched us in our main channel and you're ready to become better at picking individual stocks, click the link below. Sign up for our 7-day trial of our community with our software. It's a great place to level up your investing game to make you a better investor. Thank you for your time.